So joining me this morning, we've got SADC investment leaders, so talking about the outlook for investing. So directly here, we have Molebogeng Mazibuko, mining lead and associate vice president at Africa Finance Corporation. Then we have Peter Meyer, director of mining for Modern Corporate Solutions. Next, we have Nora Pincus, VP of Corporate Development at Empress Royalty. We have John Meyer, partner and mining analyst at SP Angel. And finally, David Rhodes, managing director at Endeavour Financial. So maybe if we can start off the panel with just a very brief introduction from our panelists. If you want to just give us a quick intro into who you are, your background, and why you're excited to be here. So maybe David, if we want to start with you.
Hi, everybody. Just to make sure I got the right volume. David Rhodes, I'm the Managing Director of Endeavour Financial. I've been in the mining sector for over 25 years, trained as a banker, Barclays Capital, Standard Bank, so I spent a lot of time in Africa. And I've been with Endeavour Financial now for nearly 20 years. So very much focused on the mining metal sector, Africa, global, and delighted to be here to give you some pearls of wisdom.
Thank you, John Meyer, SP Angel. I started off as a young mining engineer working in a Cornish tin mine. And then after that, I came down here to South Africa working in with goldfields in the gold mines. So I had an idea of what that was like. Just as shall we say, South Africa was transitioning. I went from there to working in London. Montague Mining Finance was project finance. Worked for some bigger banks, Goldman Sachs, Soc Gen, and then moved on, moved down the value chain, I think, working for smaller banks. And these days we have a brokerage called SP Angel, which is great fun because we help finance an awful lot of mining companies in London. We work with about 40 at the moment.
I'm Nora Pincus, recently joined Empress Royalty, so I'm about 2.5 weeks into that job. I've been in mining my whole career. I'm a lawyer by training, kind of fell into mining, wanted to work on the big deals, so wanted to work internationally and joined a mining firm and immediately was sent to Kazakhstan for about 9 months, which was, big deals internationally. I don't know if I knew what I was signing up for, but I caught the bug and it stuck. My background is really in structured finance. I've been in both commercial and legal roles, most recently with a direct lender in the mining space. And now with Empress Royalty, done a lot of work across the region, and I think we're really excited to be here, and we see a lot of investment opportunities in the region. So, here to meet people and continue the dialogue.
Hi, my name's Peter Meyer. I've officially been in mining 50 years, and I know it looks like I've been in mining a lot longer. I dug my first tunnel, though, 65 years ago. Grew up in Kellogg, Idaho, the Silver Valley, world's deepest, richest silver mines. Worked 4 years, went to university, Montana School of Mines, 1977 to 1981. And I came straight here to see the world's largest, deepest gold mines. So I worked for Harmony Gold Mine. I was a marketing manager for IMCO Mining Machinery. Worked for Alan Gray as a gold analyst. Nedbank as mining fund manager, then later senior equity manager. Worked for Mark Shuttleworth, .com billionaire. Well, he was a millionaire when he hired me, but he's a billionaire when he fired me. Then I joined Katie's with my current boss, Robbie Gonzalez. He was a corporate financier. And I thought, it's time to retire. I'm going to do 1 or 2 mining deals and retire. 2 years max. Here we are 18 years later, but we're still within 2 years retiring. So I've been doing corporate finance for the last 15 years, almost all in South Africa, but a little bit in Zambia, and just a tad in Namibia, Botswana.
Good morning, everyone. Thanks for joining us. So I've been in mining for just over 15 years. He's been in mining for over 50 years. So we have a couple of generations on stage, clearly. I'd like to also acknowledge that I like the diversity on stage before I start with my introduction. Thank you very much. I'm Molebogeng Mazibuko. I started my career as a geologist in Goldfields. I think in South Africa, that's where the best engineers and geologists start. And then I was in mining for just under 10 years, and then I joined IDC, Industrial Development Corporation. I left after 8 years as a senior deal maker. Peter was my client, so it's good to see him here again. I'm now with Africa Finance Corporation. For those that don't know much about it, it's a multilateral investment bank headquartered in Nigeria. We have, we're multi-sectoral. We also have a focus on mining. Our focus is to invest only in Africa. We do corporate finance, project development. I think we are a solutions provider. I don't think there's anything we cannot do if it's within our risk appetite. We, as much as we're a multilateral bank owned by 42 countries in Africa, we are structured as a public-private entity. And we are trying to expand our footprint in Southern Africa and hence our participation on a SADC panel. Looking forward to engaging further now and even post the panel discussion. Thank you.
All right, thank you, everyone. That's great. And it is nice to have diversity on the panel and also people from various backgrounds to help kind of bring different perspectives. So to kick things off, so let's start on a positive note. Where do you think the biggest opportunities are in terms of growth for the region? So maybe let's start at the end with David.
Okay, so we see on the financing side a lot of potential deals coming out of Madagascar. So there's a lot of wealth there, mineral-wise. Sadly, not many deals. Ambitovi was probably the largest, biggest one in that country. Not been easy, but we see a lot of potential base resources when they get their permit. They should be having their mineral sands project that they found some rare earths. So, very perspective, and there's other projects as well. So a lot of potential there. They've just had the elections, so hopefully the government will see the value in mining and obviously the GDP growth and the benefits. So fingers crossed, that would be something. One of the biggest countries I've been talking about for too long is Angola. So Angola has so much mineral wealth. I know it has the diamonds, and obviously it's mining for diamonds is the main mining aspect, but there's so much other mineral wealth in Angola. Obviously oil is been the mainstay of the economy, and there's been some previous issues there. But my view is, if we can unlock Angola and working in Angola and actually developing what most of them are old mines. So, when the Civil War happened, the mines shut. So there's a lot of easy pickings from a mining point of view there. So Angola, for exploration and development people, you just got to unlock how you get those assets and how you work with the government and the local mining industry.
Well, I'll jump in quickly and I'll say, I think Namibia as a jurisdiction, there's a lot of opportunity. There's a great, diversity of minerals, from uranium to lithium to obviously precious metals. I think that for certain investors who have not worked a lot in Africa, Namibia can be a good region to sort of start and dip your toe into. It's very stable jurisdiction. I work in secured lending. Now I'm with a streaming and royalty company where we tend to take security. So that's one thing that we look at, right, is how accessible is the legal regime? How likely is it that we'll be able to enforce our security over the collateral in a workout situation? And I think that Namibia has a very transparent legal regime in that regard. So I think if you don't have a lot of experience in the region, Namibia is a place where you can put an investment, feel relatively safe as you get to know the rest of the region.
So I guess, as an ex-geologist, the fact is there's so much unexplored in Africa, and I don't think we can even comprehend the opportunity. But based on the little that we know, and little is the main word, right? I think there's a lot of opportunities coming out from the whole catalyzing of the transition era. where we need to meet demand and it's outpacing supply. It's outpacing supply plans. It's outpacing the number of projects that we have under project development currently. And for us as a Pan-African institution, not just focused on SADC, we are looking for transition metals just to see if we can help meet the demand in future. But we're also mindful of the fact that Africa has over 50% of PGMs, manganese. We have a lot of gold, good quality gold. So even the traditional type of minerals that we are known for, we are still very much prioritizing. That's still the opportunity base that we're still focusing on proactively. We, just like my colleague, we like Angola. We're looking at a rare earth project in Angola. Hopefully we can close it. There's a lot coming out in terms of diversity of commodities, even in spaces where one would not think they exist. There's good graphite quality in Tanzania. If you know, there's a lot of competing projects in Tanzania for capital, etc. Good projects. The jurisdiction is also not bad, but we also not country agnostic. We go into where the opportunity is because our mandate is to go into Africa. Obviously, we do measure the risk. We see if we can manage the risk, but we go everywhere. If you look at the historical trends of where there's been, civil clashes, the mining industry is often still protected because that's their bread and butter. So we take a view that's a bit more objective than traditional investors because of our inherent interest in Africa. Thank you.
Peter?
Yes, I'm pretty biased, and I've got a couple slides. So I'm going to use the slides to show you why I'm biased, and then you can disagree with me or raise your hand later and say, yeah, Pete, we agree. And this talk is around the 16 member states of SADC. So I assume all of our conversation, it's going to be centered on these 16 states. If we could see a couple maps, then you'll see how tied together these states are. And you'll see right in the middle of these SADC countries is my favorite. Next slide, please. It's the one called Zambia. And yes, it's the hub in the wheel. All the rest are spokes. And a couple more slides. Copper, we know Zambia was built on copper, just like the DRC is. Next slide, please. Sorry, next slide again. There we go. Back up to the Zambia. There we go. Zambia was, I think, the third or fourth most dominant copper producer in the 50s, 60s, even 70s in the world. And then we can see how it was a factor of the copper price and the political party running the government then that drove mining almost down to 200,000 tons. And then with the change in policy, change in political leadership, when I say change in policy, that's mining policy mainly. They virtually just threw out all the regulations they'd imposed since the 70s with nationalization. And you got a new government, new policy, and tens of billions of dollars started flowing into Zambia. But unlike DRC, I'll show you a graph of DRC in a bit. Zambia has a history of announcing ambitious mining targets. They proved unattainable because the government didn't really have the willpower. So they went through the motions, and that was enough. Threw out the bad policy, brought in the good. That was enough to get tens of billions of investment. But they still had a core in government that didn't really believe in the new way forward. And so they've been stumbling. And can we go back to the previous slide? They've been stumbling. They got up to almost 800,000 tons for a couple years, like 20, 21, 22, and they've now fallen down to less than 700,000 tons. So they keep announcing they're going to double production 2 or 3 years. All right, I'm almost done. As we all know, there's a new president in Zambia, and he's a businessman. And he wants the job of being president. He doesn't need the money. He wants the job to save the country. He ran for office 5 times. And I was up there The 5th time he's running for office, the army surrounded his place. The police tear gassed him. He held out for almost a day, and then they dragged him out and locked him up for weeks. This guy wants the job. He wants to save the country. And Zambia was one of the world leaders in zinc and lead technology with cobweb. They were a major producer of lead and zinc. They don't produce any lead and zinc now except illegally with Hamas. So I think with this new president there, we're going to see a lot more base metal production, and we're going to see some of these ambitious copper targets, because the DRC is now 2.4 million tons coming off almost nothing. But there you have a dominant government that allows the dominant mining player, which is obviously Robert Friedland and the Chinese. The two are working in tandem, and they can get so much done. When companies and business is in tandem with government and the people, the sky's the limit. In Angola, I think it's too early yet for the small guy. I think DRC is difficult for the small guy because there's no infrastructure there. They've been decimated the last 34 years. It takes big players, big money. But Zambia, everybody's got a chance. The legislation's correct. The government's correct. There's gold all over Zambia that's never focused before. And we have a lot of clients now coming. So that's my story for now. But I believe Zambia is going to show the growth for the next few years. And it's for all players, small, medium, and large.
Okay, so I'm going to ask you a question because I'm curious. So Zambia, obviously there's been a lot of fluctuation in production, politically unstable. A lot of exploration work needs to happen, longer time horizons. What do you say about people who are nervous about going into a long exploration project in a country that has had a lot of political upheaval and changes in the mining code?
I hear what you're saying, Nora, and all of Africa's like that. But right now, we've got the same president for 3 years, and everybody who's gone up there has come back so positive. And most of all, follow the money. Billions have gone up there. Anglo-American, who tried going back up with the new regime back in 2001, 2002, 2003, they threw in the towel. They said, look, the government's not too bad. The policies are okay, but the country is too wore down. And they went to Peru, and they did well. Chile, they did well, but now they realize, geez, politics in Zambia are much better than the other African countries with the new regime. And yeah, everybody's positive. I think if you're going to choose one, you'll be happiest choosing Zambia.
Well, you're right there, because clearly Zambia is doing a lot better than it was. And Anglo have decided to go back in quite recently with their deal, their joint venture with Arc Minerals. But I think we should turn this question around a bit, because it's not what's the best country in the SADC region of Africa. It's which areas carry the greatest risk. Can you cope with the risk reward? So certain countries like Madagascar, really quite difficult because you just don't know if you're going to get your license. Even if the government gives you your license, you've still got a whole load of NGOs you've got to deal with. It's a very special environmental place. I mean, it's got some great projects, no doubt about that. Base Resources Toliara project is world class. And there's loads of interesting graphite there, and no doubt some other stuff. But it's still a very difficult region. So you're better off looking at places like Zambia, which is great, so long as the president is able to succeed, because he's still got a lot of corruption underneath there, and that's still being rooted out. And I know the president takes calls from certain mining people if they say they've got a problem. He will deal with it personally. He doesn't trust his office to deal with it. He deals with it personally. We know other countries are so much easier, Botswana, Namibia, but of course we have to be conscious that there could be regime change. It could actually get worse. So at the end of the day, when I think of, well, where should we invest? We should be following the projects and the commodities that we really want, and then ruling out the countries which we should avoid. I mean, Angola sounds really good at the moment. Sounds like lots of people are going in there. But do we really know how the regime is going to behave going forwards? It sounds good today. Maybe it won't be so good, in a year's time. And let's face it, mining projects take time. If you go in somewhere, you should be planning to be there for 10 years. So what's that regime going to be like? How is it going to treat you in 10 years? Are they going to suddenly ramp up the tax rate? Are they going to bring in all sorts of other rules that make life more difficult? So mining's tough enough as it is. You need to go somewhere that's supportive.
I kind of semi-agree. but it's all about the grade and the quality of the ore body. So you obviously can't determine, all the good ore bodies, all the good mines. They can be anywhere. The country borders were just formed many, many years ago, and it's just good luck or bad luck which country your ore body is. But you talk about Zambia, you talk about Namibia, Botswana. Everyone's been there. Everyone's picked over it, done the seismic. They've all done the drilling. I'd say Zambia, from an investor point of view, the good bits are gone. All the high-grade stuff, if you want First Quantum or whoever, they've dug it out. So you're scratching 1% copper, Zambia. That's not high grade. They're much better, and that's why I mention other countries. There's much better high quality ore bodies, which I think are worth it from the risk reward. And you mentioned it, John, about, it's risky. Mining's risky. So why go for 1% when you can get 5% or 3% copper, as an example, somewhere else? And you're right about the longevity. But if you've got a great ore body and it's a world-class asset, then you can wait 5 or 10 years to develop it. But if it's a 1% copper ore body, you can't wait too long. So if the regime changes, you're sitting with a lot of money wasted because it's not going to be economic and it's not going to get investors excited. So the reason why, look at the regions there, if the ore body is world-class, then it's worth investing. And I think the countries mentioned, which are nicer countries, you'd go there on a holiday type of countries, as I call it, the grades aren't there. So that's why I'm a little bit more risk, in the sense of where I'd put investment money, looking for the world-class assets.
I mean, maybe we can talk. Yeah, go ahead.
Just very short, right? Because I'm also partly in, partly out. So for me, corruption is a global reality. It's not just in Africa. And I think once you accept that, we will understand that to be a miner, you follow mining opportunities. And once you understand the circumstance that's localized to where you're pursuing the mining opportunity, you start to deal with the circumstance. You don't pursue to be a politician, but you deal with all the stakeholders that are part of the asset. It's risk reward indeed, but for me, I guess as also a former geologist, you follow the best grades. Because best grades, that's what sustainability is. Where you in the first cost quartile, you're financially sustainable. You're able to, from an impact perspective, you're able to have social capital, building clinics, building schools. You have enough to cover all your stakeholders. And all stakeholders are interested in you being successful. So for me, that's being a miner. The politics, I think people are in Mali, people are in Gabon, and they're managing just fine because they are finding ways to manage their relationships and ensure that they're still running sustainably, and also because they've got the best assets. That's fundamentally it for me.
Absolutely. So, I mean, essentially looking at that risk across the region, are there things that stand out, or are we kind of looking at, well, there's all of these things like regime changes or political risk, but you kind of take it within the role?
I guess I'll just say that the project is everything, right? Grade is everything, ore body is everything, right? So I don't think that most investors make decisions in the first instance based on jurisdiction, right? I think you find your resource and you go from there, right? And it's all about identifying risk and then thinking of ways to mitigate it. So I think that, as you think about going into an investment in the region, follow the resource. And there are ways, it's all about the project, it's about the management, it's about relationships with government, with other stakeholders. And once you do that work, I think the rest can flow.
But I think we're seeing, you talk about money, obviously China's been a big investor in Africa over the last 15 or so years. And then you go to North America, obviously more the US, and they've ignored Africa from an investment point of view. But from what I'm hearing in the last couple of days, they're all here. The US is here. All the secretary of whatever's, and they're all having meetings and with all the ministers saying the US is here because it's realized the mineral wealth. So I think it's going to be interesting to see what how the reactions are when the US come. But I think there is a lot now, and the transitional metals, and everybody's trying to secure their own supply now. I think they hopefully, fingers crossed, will be, a lot more potential capital available coming into Africa, mainly from the US, because obviously it's one of the world's wealthiest countries. So if that happens, hopefully there'll be a step change of getting some more capital in, because at the moment, there is limited capital out there, limited investment.
Sadly, the Chinese have really made the Americans look quite stupid. They've been away from Africa for so long. They've done so little. They're not really that much of a presence.
Glad you said that.
Yeah.
Diplomatic.
We've been. Let's not be diplomatic about these things. The Chinese have, they make themselves unpopular, which is very lucky for us. And it does mean that other countries can come back in. Let's face it, Africans will take money off anyone. It doesn't matter what color or race they are. They'll take it one way or another.
I think that's everybody.
I was going to say, I think that's
It's not
mining.
just Africans. I think so.
And let's go back to the risk-reward thing. We talk about copper because that seems to be a popular subject. You'll go and mine 1-2% copper in Namibia, Botswana, various other countries, and you'll get it financed, and you'll make money out of it, and there's probably not too much risk in it. You want to go into the DRC, you need to be up at 5%, something like that. It's got to be much, much more rich to make it worth your while, because all the different costs associated with it, all the different risks. I mean, it's very expensive to get people out there if you can get them, and then when you've got them out there, you've got to keep them out there, because it's not just nature that's trying to eat you, it's everybody else. I shouldn't say that like that. But and you're going to Zambia, yeah, I get it's a great place for copper, but I hear that you say the rich deposits have been taken, but I still think there's an awful lot to discover, and they're still getting to grips with the complex geology of Zambia and how lots of people are actually finding copper, but they're just not finding enough of it in the concentrations they want. But I think if you give them more time, they'll get there.
I'll add to John's chirp. Zambia is not as prospected as we think. Because we were comfortable with it, and it had a very good mining culture in the 40s, 50s, 60s, most of prospecting stopped in the 60s. That's when nationalization, Kenneth Gwinda, started taking over. So by 1970, we found from the clients we got there in the records, there's just almost no drilling, no geophysics that were done from 1970 until the new millennium. Then there was high-level geophysics done by the big houses. They were flying airplanes, helicopters, and that data is pretty good. Anglo-American, Billiton, Anglo-Vol. But that was just done, as the graph showed, 2002, 2003, 2004, and then it stopped. And it was predominantly for copper. But as far as the base metal goes, we've just found nothing on any of the base metals other than copper since the 1960s. In gold, we haven't found any drilling results for any of the gold. So we're just now getting a lot of new properties, and we see the gold has been leaking out illegally. So there's a lot more gold coming out of Zambia than the officials have records for. So I think the prospectivity is very good there, but we can say that about all the other African countries. Yes, you choose your risk. But I think the risk in Zambia is defined. I've been in South Africa 40 years. The risk here is defined. It's on TV, it's in the newspapers. So if you can handle the risk, if you can identify it, you can usually make a way of handling it. And as far as license security, it is difficult to get a license here. We see that all the time, how bungled up the DMR is, how far behind. But we still have an effective court system and an effective license that once it's granted, there's no record of anybody in South Africa losing their license. You'll hear threats from an errant minister now and then, but nobody here has ever lost a license. So when you get a license in South Africa, it's gold. Nobody has any doubts about it. It won't get taken away. But maybe it's good to start with your body. You find it, or someone brings it to you, and then you say, okay, but do I like that country? Can I handle the risks in it? I'm a brownfields guy. So the plethora of available data in Zambia and South Africa is more than enough to satisfy my clients and I.
I like that. I must admit, but I want to take it back to Africa for me, and I want to talk to the point that you just mentioned earlier to say, there's a US delegation that's currently here. I think the last data point in terms of China investment into Africa was around about 76 billion, somewhere there. I stand to be corrected, just in case you're transcribing. Also, and it was about, I think China owns about 7% of land in Africa. That's how much invested they are. So for me, when we mention things like this, EU delegation and everyone who's attending, and you understand the caliber of people that are here and the reason why they're here, you start to understand that there is a huge opportunity in Africa. And what we now need to realize is the fact that if there's a huge opportunity in Africa and people are coming here, it means then Africa has some bargaining power in terms of now saying where should some plants be located, which I don't think we've utilized adequately thus far. And I think that's the opportunity as well that we need to define from the caliber of people that are here. And for us as an investor, as AFC, we're really much interested in vertically integrated projects. There needs to be value add from Africa. There needs to be conversations about local content, local service providers, and not just from a policy framework written on paper being executed on, because there's a lot of capacity in Africa. And for me, that's the opportunity that we need to start highlighting to say, what more can we gain from these relationships and this money? And you're right, money is not discriminatory. We take whatever money comes, because maybe in some instances, I'm sure there's not enough local capital and we do need the capital. So I think let's take it back to Africa. Africa is an opportunity, and we just need to define how we leverage off these relationships. So one thing that we've done as AFC, we have an initiative with Excalibur where we want to go into different countries in Africa and do mapping, because we understand the gap in terms of there's not a lot of data, especially reliable data. And if you're going to attract capital, you need to somehow de-risk the industry to an extent. Also, we do project development because there's not a lot of capital flowing for project development. That's the riskier part of the project development life cycle. Right. And once that is addressed, we're hoping that we can attract more capital coming into Africa, because there is a huge potential. Yeah.
We haven't really talked about where that capital is coming from so much, and where it's being directed right now. So does anyone want to jump in on that?
I mean, I'll just sort of jump in and maybe make a more meta comment on mining right now. I mean, I think there is a lot of private capital in the market. I think that is going to be increasingly true over time. The institutional, the large funds, the large money managers, they're decreasing the amount that they deploy into mining every year. And I think that's just going to be a reality. So I think we're going to continue to see more private and specialty investment, particularly, I think, in Africa, but also kind of more globally. And I think that's just a reality that most miners, particularly junior companies, are just going to have to get comfortable with.
I'll translate some of that. In that, yes, there's private capital, it's family offices. Those guys who know what they're doing do it really well, and they get really rich doing it. There's no doubt about it. Yes, the investment funds have become more and more risk adverse, but don't forget we're in a cyclical sector. So what that cycle says is that when US interest rates are high, all the capital goes off into US treasuries. Money isn't really available for mining because it's seen as high risk and difficult, and why would you do it? When that changes, when interest rates fall, sure, money will flow back into commodities, prices will go up, money will then come back into mining again, we will see more equity, that equity will accelerate development projects. In fact, a lot of companies still going, just at a slightly slower pace than they might prefer to. There aren't so many project finance banks around, but that's been replaced by a lot of development capital, by much easier funding, offtake, trader financing, royalties. There's so many more instruments than there ever used to be. So it's not like the capital's not there, it's just coming from slightly different sources. And if we look at something like Kefi Minerals, for example, huge amounts of development finance being offered to those guys, and it's just a question of pulling it together. And something that this panel is focusing on is the environmental and social side of things. Development finance comes with a lot of, you've got to satisfy that whole package. You've got to make sure that your plan has incorporated all the ESG that is required. And very fortunately, when I talk to the guys who are developing projects, all of that's already built in. So when the development banks come along, they don't actually have to do anything new. They've already accounted for it.
But it still takes 2 years.
Yes, it does. Yeah.
Yeah. If I summarize the investment I've seen going in, when we talk billions, it's almost all coming in from traditional mining companies, whether it's Rio Tinto, Freeport-McMoRan, Anglo American, First Quantum, the large Chinese companies in Ivanhoe. I'm just guessing, but I'd say that's probably 70, 80% of these tens of billions that we've seen going into Zambia and the DRC. So those are people that have been there for 100 years, that have done this kind of work for 100 years. And when Rio Tinto goes in, or Freeport-McMoRan, they can get IFC money, World Bank money, or they can get large banks to come with them. That's, I think, the vast majority of money that's gone in there. The traditional money, well, what was the traditional money? When you had established mining houses in this country, like the 50s, 60s, 70s, 80s, then a lot of the shareholders of those mining companies were unit trusts, pension funds. But that's kind of gone out. I think with all the different changes in Africa in the last 40 years and the change in world's attitude towards mining, we're kind of back to where we were 70, 80 years ago, that it's only the miners that are coming in and their financiers, they're funding all these tens of billions at this time.
Yeah, and I kind of agree with that sentiment. I think we are, as a mining industry, the worst investors and the worst people. I mean, you got Vale and their dams in Brazil, and you just all the headline news you get. It's always disasters. And if you look at the generation that are getting into investing, it's mining's not environmentally friendly in their view because of the disasters you see, and people die. Sadly, in the mining industry, safety records are low, and you look at our carbon footprint; it's high. So investors now are so ESG focused. A lot of the investment funds you mentioned are pulled out of mining. Church of England trustees don't invest in mining. One of the largest UK investments used to. They're pulled out. Coal, obviously, hardly anybody invests, but we all use it, and people who are making a fortune. But that's a side discussion. The fact is, investors don't understand, as we do, the value of mining for these countries. You mentioned in the end about the hospitals, the schools, the education, the wider value of mining, apart from providing the mechanics for their phones and all the stuff they live on, these guys. So, we are very bad at making our industry attractive to investors. And I think that's the issue we have got to change. Because we do all the ESG stuff. We've got sustainability, we do that, but suddenly you get a newspaper headline where we just wreck investment in our industry. And that's Africa and beyond.
But this is a symptom of what newspapers report. If you fell off that chair and died, that would be what was reported about the one-to-one. Whereas the media are not going to report mining investor invests in small cap junior, but they will report if you fall off the podium here, and that will be a major headline. So I don't think we should worry about it. For me, the health and safety in the industry is amazing. The work that is done. Of course, mining is risky. Lots of things are risky. Construction sites of any sort are risky. Even running a bar on the waterfront has risk associated. It's just that people don't seem to worry about it so much. In fact, the mining companies, I just think, well, especially today, properly run mining companies are brilliant at health and safety. The way they used to be years ago wasn't so much like that. If you go into the informal sector, it's very, very different.
But I think the issue is we don't tell people about it. We don't speak and say, look, we're doing the best for the stakeholders, the community. We actually are sustainability. So you build a mine, you're also working to make sure the people in that area have, proper hospitals, proper healthcare, a proper long-term sustainability around that asset. We don't talk about it. I think because you won't get millennials investing.
So, when you talk about, because your question is more on capital, right? And I like what you said to, in terms of investors need to see these things. And it's not just about reputational risk. It's really about the person on the ground. It's ultimately always about the person. You mentioned value just now. I think a couple of years ago, people were protesting because of safety issues. In South Africa as well, you see a lot of protests because of safety issues or people being uncomfortable about certain matters regarding mines around their local communities. And I think you would not see a lot of these frustrations if these mines from the planning stage were accounting for the fact that they need to take care of people. For me, it's such a big responsibility that should be taken seriously by mines, because when you see a mine in your community, it gives you hope. And it gives you hope that, if you're an elder, that your children and generations that come after will be exposed to better healthcare, better schooling, bursary opportunities. I can give you examples. Some of us, I'm from Northwest. For example, Sibanye had bursary programs, Goldfields they were giving people scholarships. Those are the things that you want to see, where people, because of just one mine, the lives of people holistically change. And I think you're right when you say maybe we don't narrate it enough so people can see. But as an investor, if I see that you have that social investment accounted for in your plan, because you're all also about impact, that actually, motivates people to fight for your transaction. And that's where you start seeing money flow. I do believe there's actually a lot of capital. It's just that it has to be informed by certain instruments. It's governance. JOC, there's many instruments, and most of these projects that you see are actually compliant. It's just some people don't know how to record their compliance. And that's the challenge some of us have noticed, especially with some indigenous sponsors, where literally if you go through the steps they've taken, you realize that they're actually fully compliant. But you need an investor with somehow a development head who has time to go through that process with them. Thanks.
But I will say, at the end of the day, it's about returns, right? That's why we're all that's why we're up here. That's why we're all at this conference talking, right? And so to bring it back to Africa, I mean, I think that's the opportunity. Mining, people have made a lot of money, people have lost a lot of money, right? And I think Africa is one of the regions where you can permit a mine, you can build a mine, and you can operate a mine, and you can do those cost effectively. You're not seeing the huge CapEx overruns. I mean, there are obviously many examples, but not like North America, right? And so I think that we need to be better about telling our story from a value proposition standpoint. Yes, ESG, safety record, all of that is very important to investors, limited partners, whoever is behind the fund. But really, what are the returns, right? Show the economics, because that's the exciting part, right? And I think at the end of the day, money managers are here to make money. And so let's tell that story.
No, I totally agree. And, to permit in Canada is 10 years. That's 10 years of costs, 10 years of keeping that company alive just to get your permit. And obviously in Africa, hopefully, it's less than 2 years. And they do the same studies, they do the same due diligence. There's no one's scrimping on doing ESG and all the reports and everything they do. It just happened to be they want the investment and they see the value compared to North America.
Look, I assume everybody here is in the small to mid-cap mining sector, and I assume everybody here at heart is basically an investor or a fund manager. Now, I'm assuming that because that's what I am. I'm small and micro, and I'm a fund manager. And so if mining was so risky, why was my fund number one 7 out of 9 years in the 90s? You know, if I was in the riskiest sector, because you can define it. And we're actually in the best space. We have to face reality. Like Warren Buffett always says, deal in reality, not la la land. Reality is mining's always going to be the poster child. Governments love mining because when mining comes in, they have a rallying cause for the populace. You know, there's large buildings and they know the miners are hostage. You know, when a mine comes in, it spends billions. It's all in the ground. It can't leave. Governments, they don't even like these IT companies because they don't understand them. They don't know how to tax them. They don't know how to confiscate their goods. They don't know how to rally a protest. They can disappear the next day. But mining, governments and communities love mining because it's there forever. So we don't want to get in the big cap mining sector. They're stuck. They've got that sign around their head that says kick me and a sign on the back that says hit me. And it's always going to have that. And that's why the market factors that in. That's why they trade on single digit PEs and they always will. But our sector is the small and micro because there are multiples in those returns. And yes, you wait 5 and 10 years, but you get 10 and 15 times your money over those 10 years. Because you're below the radar, the community can't really protest because you're out there with funny geophysical equipment. Maybe you drill a hole now and then. And as Molebogeng says, you bring in everybody around you. You give the village a little bit of money. You help them with the school. Naturally, you hire the locals. So our risk is nothing compared to the big mining companies. So I don't ever want to get involved in a big mining company. But the small ones, they get in there early. They work with the locals. They're below the radar. And they will get many, many multiples of what they put in.
And you know, when you refer to what companies do in the local environment, ESG isn't about tons of money. It's about thoughtfulness, consideration, and planning, and making sure that you bring everybody along with you. So as you say, mines employ lots of people. They sponsor programs. They help with education. They help with medical facilities. There's so much that they do just by which helps everybody. If you bring the community along with you, everybody benefits.
So, you know, I thought you made an interesting point earlier about kind of the transition era and kind of the new opportunities that you were seeing develop out of that. So maybe you can kind of continue on about investment opportunities that you're seeing or, you know, growth in the specific kind of energy transition side of things.
So obviously, you know, in Africa, because we're natural resource rich, you do get rare earth opportunities, obviously graphite, but most of these commodities, there's a lot of opacity, there's a lot of unknowns where it's not really easy to make an investment decision. It's not easy to forecast where the market is going in terms of prices, etc. Because, you know, data is concentrated and the people that have the data are not sharing the data. It's competitive for them. So for AFC in particular, it's a strategic objective to make sure that these minerals are being exploited for the sake of the transition. So from a risk appetite perspective, we are realistic about the fact that we may not have all the data points, but with what we have access to, we make way. But that's where you see most of the opportunities. And because it's also new commodities, we're still at an opportune time as Africa to say where there is processing opportunities, we'd like to see that being set up in Africa. So there's still a bit of a bargaining power from our side, which we like. And if we act early enough, I think we can really get somewhere. And I also think the challenge in Africa has always been that we talk for too long and we do after very long. By the time we do, honestly, we don't have economies of scale anymore. We don't have bargaining power. So I'm just hoping that in this era, we finally get to a point where we talk about it and we do it. You know, I do like coming to one-to-one mining in Daba. Conversations are good, but I think there needs to be actionable points after this to say, how do we collaborate better? You know, to underscore collaborate, because if we collaborate better and we all have the same interest in Africa, I think we could do much more, and especially on the processing side, because I think for me, value add is the biggest opportunity. It's GDP growth, it's empowerment holistically. Yeah.
Yeah, I think on the processing side, I mean, the US obviously have got trillions of dollars and they've got all their recent acts they've passed to try and prevent, obviously, China's dominance in the processing of all the vital rare earths and minerals we need. The issue is where? You need cheap power, educated workforce. So which country is going to get that? And the issue they have in the US as well, because they're talking about processing plants there. But by the time you go through the regulatory approvals, the state next door wants to get that processing plant. And their senator is complaining, why aren't I getting a processing plant? Why is all that money going to the other state? I want the jobs. And the problem, that same thing will be in Africa. Which one of those countries gets the processing plants? Because the other countries are going to say, we want that processing plant. So I do hope there is some agreement, but I think the issue comes about countries fighting for that investment and getting them all to agree that your turn this month is, lithium processing plants, but guess what? Next month you'll get a graphite, plant. And that's the problem in the US at the moment, is there's trillions of dollars for processing plants, but they can't agree which state gets it, even though they've got cheap power and they've got et cetera, et cetera.
So there's no doubt that China has had a national strategy of dominating the world's processing industries. And we've seen it. I mean, graphite is a huge one. Lithium, of course, is enormous. And that's part of their drive into becoming a dominant electric vehicle manufacturer. And, of course, America and Europe is really quite concerned about that because they're going to lose lots of jobs in their car industries if they don't work out how to make this work. And either they have to cooperate more with China, or if China starts pulling the levers as they have been and withholding rare earths and graphite and other commodities, then it's going to become more and more of a problem. Now, when we look more locally at processing issues, South Africa has a lot of mineral processing. That has developed with the mines and the commodities that they've been mining on the bushveld.
But the trouble is power. Power is the issue.
Well,
it's not cheap, and it doesn't always.
And we could talk about
24/7.
We could talk about ESCOM for a few hours here, couldn't we? Quite easily.
But the carbon footprint, you really need hydro or solar. Obviously, got solar, but at night time, what powers you? So you really got to find, and the US has got a lot, because of fracking and the gas, they've got the cheapest power, and that's where a lot of people are processing and doing their facilities in the US because of the cheapness of power. And you've got a labour force.
And one of the brilliant things about miners is they're all looking at how they can reduce their power costs and how they can make that power greener. Because cheaper power is generally greener power. So in Africa, the great thing is there's lots of sunshine and lots of land. So you can put in lots of solar, maybe you can put in some wind. And if you're really lucky, there's hydro. And just about everything we've looked at over the years has had some kind of program for looking at bringing in renewable power. Not just because it's renewable, but also because it's cheaper.
So we only have a few minutes left, but I know we have a few questions from the audience. So
Thank you. I think one of the things we spoke about, which countries in the SADC region is attractive from a mineral point of view. But I think as a producer, you're thinking, okay, but what countries do you approach for the funding? You've talked about the different kind of investors, and you often get in the different SADC countries where the different governments almost side or have their alliance with certain, certainly politically align with other countries, and that impact, I'm sure, the investment perspective in some of the investing countries. So how do you approach that, and how does that work? And also, is there then a case to say, listen, there are certain commodities which you would approach the US for, others where the UK is better, and then the other way around. But I mean, I just thought from the perspective of where do you approach investment from a geographical point of view, how do you decide on that?
I mean, in this climate, in this world, you approach everybody, don't you? And hope somebody realizes the value of your asset and wants to invest with you. So, from a building a mine perspective, then you use the export credit agencies around the world. No one's going to give you 10-year money unless you've got a government backing you, or institutions like the AFC and those institutions. So from building a mine and raising that 300 billion or whatever it might be, that's using government support from that. The issue is to get yourself to that stage. And we're seeing in North America some of the US government money going into exploration, which is great. Hopefully they're here to think about the same thing in Africa. and this region, hopefully they'll be putting some exploration money in there. So it's starting to happen in that respect. But in reality, I think government's the only way forward in mining to support the industry now with this transitional metals, etc.
So we have one more question.
Thank you. There seems to be quite a lot of chat at the moment about Namibia, base metals, copper, a lot of people going there. How much is the jurisdiction sort of tail wagging the dog? And is it true, the saying that Namibia is rich in poor deposits compared to the likes of the DRC and Zambia, for example, copper base
I think it's
metals?
very true.
Yeah, I mean, I think back to, something we talked about earlier. It's grade, it's scale, it's size, and then the rest follows, right? And I do think that a perspective, particularly from a North American investor, is that the jurisdiction should be the first filter. And, I think it's important, but maybe it's the third or the fourth, right? And I think that's in education. I think miners are very bad at telling their story. We've been letting other people tell our story for a long time. And so people need to be out there advocating for the jurisdiction, talking about their project, and doing a little more storytelling so they can educate a less sophisticated investor base.
And for example, we've got this conference, there'll be outputs coming out of this, but has anyone ever calculated how many jobs mining has created in this region, for example? Has anyone told the world how many people are employed in mining and what the multiplier effect is in these countries? And therefore, without mining, you'd have X millions, I presume it's millions, hopefully, without jobs. Has anyone said that? Why don't we announce that when we do closing events around the world? How many hospitals, how many clinics, how many people are saved from diseases? And there's a company we're working with at the moment. I think their clinic does 30 babies a month or something, but they're healthy, they're born, they're fed, they support them and get them, a healthy start. So do we announce that? Do we do this? No. One-to-one should start this. Start pumping out why we're here, and maybe get more investors.
That's interesting. Taking it back to Namibia, right? So you must have a balanced perspective. So, there's some assets that it might not be the best grade. It's like a medium best, I'd say. But when you merge that with how stable the government is, you could actually build a good investment case out of it. When you merge that with the cost position of the asset, very shallow, easy to mine, free dig, etc., it can still be more viable than where you find the best grade. So it's really a balanced viewpoint. Yeah.
And it's not just the government. I mean, if we follow Warren Buffett's mantra, what happens on the ground? You have to work really hard to get mugged or robbed or have some kind of accident in Namibia. It's just generally a safe place. Same to be said for Botswana. Other countries in the region, not necessarily like that.
Final thoughts on investing in the region, maybe kind of a forward-looking statement from each of you.
So I'll start. So, the opportunities here, Africa, I'll say that again. The opportunities not just in upstream activity, is in midstreaming everything. And there is capital available for that. Hence, you see US here, EU here, AFC here, and other commercial and development banks. So, but what I need to underscore is we need to collaborate better. Thanks.
We always said there's no such thing as a bad mining visit. Whether you like the mine or not, whether it's a horrible trip or a good trip, all mine visits are good visits. So if you think you see an opportunity, you better, before you put the money out, go there for a week. Go there yourself, travel, talk to everybody you can along the way and come back and make up your mind. Because all these countries might have negatives on something their country doesn't, but it's got a positive to cancel it out. And you have your scorecard and add up the bottom.
Great.
I'd just say that yes, there is a lot of capital available. It's coming from a more diverse range of sources than it has in the past. I think as an industry, particularly the micro caps, the small caps, it's going to be less about the equity markets. I mean, commodity prices have been high for a couple of years. The equity markets have not followed. Is that going to change? When is it going to change? I don't know. But good projects will continue to be built, but you need to be creative about that. You need, yes, equity, development bank financing, streams and royalties, offtake financing. And I think anyone would be hard-pressed to build a project without those different pillars.
So I'm going to tell you about my personal portfolio because, at the end of the day, where you put your own money is where you should be making your best decisions. So I've invested in Australia, Chile, Canada, various parts of the SADC region, mainly Namibia, Botswana, and Zambia. My best returns coming out of Zambia, I'm over 100 times my money. Second best return, Namibia. Third, Australia. And then that's just the reality of it. I don't really care where I invest. I always have a bit of an ESG thing in the back of my mind. We helped some guys in Azerbaijan years ago where they had a really, really poor region and the guys desperately needed help. They've done fantastically well. They wanted the jobs. They made it work against all sorts of difficult odds. I would encourage anyone to trust the management. Go with the management you trust. Go with an ESG thought in the back of your mind. Try and do something good with the money, and it will do something good for you.
Really going back to economics in the sense that North America, 10 years to permit, 10 years of working capital, 10 years of cost. Africa, if you can get a permit, 2 years. So way more economic as a business to be in Africa.
All right. Well, that just about wraps it up. So thank you to all of our panelists for a really outstanding panel. We had some really great insights coming out. Thank you.
Thank you.